Many of our clients are always looking at ways to optimize their VAT position and reduce the amount of input credit that they incur, particularly in countries where the refund process can be quite lengthy. Clients would often look to use special licenses which remove input credit or input VAT being charged by their suppliers. In certain EU member states like France, Italy, and Ireland, there is the use of these special licenses. However, there's a lot of conditions, criteria attached to it, and there's a lot of risk also. So it's important that the license is operated correctly. My name is Michelle Lang, and I'm joined today by Tara Doyle, a senior manager in our consulting team, and Nazar Zaidi, a director in our tax technology team. Both have been working for many years in helping clients understand the whole process of the license, but also managing it through the Meridian solution. Tara, perhaps if we can come to you first, and maybe if you can give us more background on special licenses and the factors that clients need to be aware of in order to operate correctly.
Thanks, Michelle, of course. So, as you said, when you have a business trading in a member state and that business makes high value purchases, be that domestic purchases or be it imports of goods, it's possible that larger amounts of input VAT for refund can accrue. And as you mentioned yourself, the audit process can be quite arduous and it can take a lot of time. So in order to alleviate this, some member states introduce what they call a special license. Now, the special license allows the holder of the license to purchase up to usually a specific threshold from his supplier without that supplier having to charge VAT. So if we have a look at our example, we have an Italian supplier selling to an Italian customer, but that customer holds a special license, and up to the value of the license, the holder is allowed to purchase without any VAT being charged to him. Now, the reason for this is that the onward sales of those purchased goods are in fact without VAT. So reasons for this could be that the goods are dispatched to another EU member state, or that there is an export of goods to a third country, or it could even be B2C sales within the framework of distance sales, where those goods are taxable in another member state. So, as you mentioned, the license can be quite complicated to manage. So there are certain conditions that surround this. So the license is generally valid just for 1 year after it's given by the local VAT authority in the country in which the purchases are being made. It has a specific reference number. So it's really important that the supplier selling to the holder of the license puts this reference number on his invoices, because that indicates why the VAT is not being charged. Now, it can be complex enough to manage, but if we take as a specific example Italy, I think we'll understand then a bit better how exactly this works. So as we mentioned already, the license itself will have a specific value, but the license holder, when he wants to use some of this threshold, and he can use it for different suppliers, different transaction types, one-off transactions, he is required by law to submit what we call a declaration of intent to the Italian VAT authorities, and that advises the VAT authorities that purchases will be made without VAT under a certain sales scenario. Now, every time this is done, a reference number is sent back to the license holder. So what it can mean is that for one license holder who has an annual plafond, as they call in Italy, that there could be suppliers with different license numbers, different validity periods, etc. So that in itself is very difficult to manage. But it's also important for the supplier of those goods to be aware when the license will expire, because of course for him, he's selling goods without VAT and he needs to know up to which point the license will no longer be valid in case he needs to charge VAT again. Now, once the license is used up, the threshold, the supplier will go back to just charging the applicable VAT rate on his domestic supplies of goods. So it can certainly be a great benefit to any company in this situation who has non-taxable outward supplies, but it can be really hard to manage.
Okay, thanks, Tara. I think there is a lot of complexity around even the process, but then also managing it once the license has actually been granted. Nazar, maybe you could talk us through how the Meridian solution solves some of those issues for our clients.
Sure. Thank you, Michelle and Tara. And as you hinted on, a really key challenge from an SAP perspective is not just to get the right VAT treatment on a particular invoice, it's to show that a supplier, let's say in our example, has a mechanism in place to monitor the license threshold to perhaps change the treatment if there's no longer a relevant license amount available, and to also demonstrate in the event of an audit how they're managing this. So we're just going to look here on our SAP screen in one of our Meridian tables. And in this example, we've set up a license for a customer with a VAT registration number ending 80153. Our sending VAT ID is going to be the VAT ID used by our sales organization. And we can see that for the year 2025, we have a license amount of 50,000 euros. We've already used some of that license during the year. And what we're expecting Meridian to do via this functionality is dynamically update the CTC and then thereby trigger a different tax code. So we're now just going to go into, before we go into the example, we'll just have a look at our customer. And this is our Italian customer. If we have a look in the customer master data setup, we see that the customer has been set up with a liable for tax, and that would be the best practice approach. We can also just have a look at the VAT registration number, and here we'll see it's that exact same VAT registration number that we've set up. We're now going to go into an example here, into a sales order that we've already created, and we can see that this is against that same customer. We're just providing standard rated goods. We're just going to have a look at the condition record within the sales order. And as you can see here, the CTC is coming from the Meridian table rather than the master data. But what we're going to just show now in this example is what happens when we actually deliver against this sales order and then create an invoice, because our invoice is now going to be our trigger to update some of our other functionality. So we're just going to now create our billing document here. We'll just save that, and we'll now just pop in to see that we've created our billing document. We've created a new document now ending 9030. We'll have a look at our condition record, and we'd expect it, of course, to be the exact same as was in the sales order. And here we can see that it is indeed the same. However, that's just the first part of our functionality. We're now going to pop back into our Meridian table. And previously it was showing us 23,450 euros billed. We're now going to pop back into this table. And what we'll see here is that Meridian has now updated the total amount billed against that license in line with that latest invoice. And that's really important, because what our Meridian functionality is doing here is constantly updating the total amount billed, comparing that to the actual license amount. And as and when the license amount is met or exceeded, we will ensure that we no longer apply tax code K2 and we go back to charging VAT. And one final point we'd just note as well is within our functionality, we also have a register of all documents made against Clefon clients. So for example, the latest document updated here is that exact same document that we just created against our customer. And that again is really important in the event of an audit. Our clients need to be able to demonstrate to the tax authorities what sort of processes they have in place for managing this license.
Thanks, Nazar. Thanks, Tara. While special licenses can be very beneficial in terms of managing cash flow for businesses, it is really important that it's operated correctly, as the risk of it being operated incorrectly can result in it being cancelled, but also can incur interest and penalties. It is really important that clients have a robust and automated solution that will reduce reliance on manual process and on their users being VAT experts. That's it for today. If you'd like further information on the Meridian solution, please contact us at meridianglobalservices.com.